Hello there, traders. Welcome to today's live stream with me, John, market analyst here at Blueberry Markets. I'm going to be taking you through the data that we've just had. Boy, was it a good little bit of data for the US dollar. It was very, very good for the US dollar and the US dollar economy, the US economy, I should say. Some pretty decent data. Good morning and good day to you, Ratish. I don't know why I said good morning then. I don't know if it is morning wherever you are. But for me, it's afternoon. So good day to you. Yeah, we're going to take a look at some of this dollar data that's dropped. We're going to talk about some pound data that dropped as well. We're going to have a little look at that pound US dollar opportunity that we talked about recently, and we talked about a little bit of upside to cable, which is going to come into some areas of resistance. I didn't particularly like being long cable this week, but it has kind of rallied higher recently up into the 128. So we'll take a little look at that. I wanted to have a little jump over to the likes of pound yen. I'll have a look at the yen pairs basically, because the yen now starting to move. Is this going to be something we look to fade, or is it something that is going to be a bit more of a bigger move? So today, really going to be focusing in on the Japanese yen and those yen pairs, see how they're performing. Gold has actually performed a little bit sort of negatively as well recently. We had a little bit of a come down in gold as well, so we might cover that a little bit. It's night for Ratish, night for Pineapple as well. 11 p.m. Wow, when you're watching me, thank you. I'd be in bed right now. So yeah, right then, let's dive straight into some of this data. Let me get a pen tool up, and we'll just go through what this data was and why it was essentially quite important. So let me just open that up there. I'm just going to zoom in a little bit so you can see it a little bit better on the stream, but let's take a look at it. So what were we expecting today? So core retail sales month on month, which basically just excludes automobiles, okay, because they can be quite volatile in terms of pricing. They can fluctuate quite a bit. And this is a good measure of how the public are spending their money in the markets, right? Are they spending? That was the question that I wanted to see answered today. Are they spending, and are they spending at good levels, or are they declining that spending? Now, there is a slight decline here. This come in at 0.4% in terms of we saw, it's green on the calendar, but really speaking, that is still down from the 0.5%. So they're still seeing a decline in that sort of spending activity in the US. However, the forecast was 0.1, so it wasn't as bad as the forecast. That's why this is a green number here. In my opinion, it should be technically red because it's down from the previous. So that would be negative, I reckon. Now, if we include auto, right, which is retail sales month on month, you can see that we've seen quite a decent increase. The previous was minus 0.2%, big increase to 1%. And then even better news for dollar buyers at the moment, unemployment climbs. So this is all to do with the labor market, right? And that's where we think the market is focused in on at the moment. And this is something we spoke about weeks and weeks ago. We were talking about the shift towards from inflation to the labor market, and that's what we've had now. And you can see very positive number here, 227k down from the previous 234. Estimates were to see a little bit of an increase here. Obviously, we've seen the unemployment rate climb recently in the US, but this is again further good data in terms of employment. Seeing that number come down from last week. It just basically means that people that were claiming benefits in the US has come down. Okay, and that's what that's looking at in this move. So fairly positive for the US dollar, especially from retail sales and unemployment claims. Core retail has come down. So that has come down a little bit, but not as aggressively as those that are expecting. So why has the dollar reacted positively to this data? Essentially, that is the question I always ask myself. Why? Okay. And it's because it's not the doom and gloom. It's not the recession. Okay. And this is what the market felt was going to happen last Monday, right? We saw a huge sort of crash in terms of market value, and we did a video covering this called correction or recession. And in that video, I said I feel like it's more of like a correction rather than a recession. And this data here is just kind of reaffirming that standpoint for me. And we can see it reflected in the market, right? Let's go and have a little look around. Let's look at the volatility index. This is something that we've covered quite heavily on the channel for a while. And we looked at the fact that last Monday we had a spike aggressively higher. If I put that on a candlestick chart, we actually was in the sort of 65, 75 area, which was a spike that was similar to that of COVID, right? So that's how aggressive that move was on Monday. But I felt that that was just a bit of overreaction, and you're starting to see that volatility come down now because the US data isn't as bad, right? So if the dollar data isn't as bad and it's not reaffirming that recessionary market crash sentiment within the market, then we're going to see a positive market again. And if we go take a look at stock markets, look at this, they're on the rise again. Market is rallying higher. If I just put my 200 moving average on here, you can see that this was a level we were talking about that if price came into, could find support. If it was broken and closed below, then we were expecting a bit of a bear market. And we haven't had that. Market has been supported. We've seen a rally. We've pretty much recovered that sort of bearish move that we had where everyone was expecting the doom and gloom, I guess, the recession. But if we look at this trend line here, this trend line resistance, look at this now, starting to even break that, which is telling me that the sentiment is definitely changing here. If we go take a look at a 4-hour chart, we had a nice sort of double bottom in here. The market then broke that, consolidated, gave us one of those patterns that we talk about quite regularly on the channel, one of those triangle patterns, very bullish pattern that is, and the market has broken and continued to sort of trade higher there. So really interesting market dynamic here at the moment. Market moving back into that risk on, which was quite surprising because we looked at the fear and greed index on Tuesday and it said extreme fear. Now, I don't think this market is reflecting extreme fear right now. I think it's very much risk on. Market back into equities. We're seeing the S&P 500 rally. We've got the Nasdaq also kind of coming back into the limelight here, breaking that sort of trend line resistance as well. I think the Nasdaq actually holds quite a bit of value. If you compare it to where the S&P 500 is, and then you compare where the Nasdaq is, I think the Nasdaq holds a lot of value here, especially down towards these kind of 18,800 areas. So if we get a bit of a move up and a bit of a pullback, maybe a continuation move could be felt here and a move back towards those all-time highs. Because I don't see the probability of a market crash coming anytime soon. I think obviously a lot of those calling for the market crash were quite happy last Monday. But, the thing is that was just a overestimation on how the Federal Reserve were pricing things, right? There was this point at the Federal Reserve would cut interest rates in an emergency. So yeah, very much overreaction in the market. And look at this recovery. You can see this is a daily chart of the Nasdaq, and price formed this very strong trend line where you've got your anchor, your formation point, and then you can see we tapped into that. Market has found support, continue to trade higher. So I like Nasdaq longs, to be honest. I'm just waiting for a correction on the daily chart and give me a little bit more of a pullback for an opportunity to get involved with this. But this has been a chance for those that were in the sort of bull run that we had between sort of April and July of this year to get back in, essentially, right? If we go take a look at some of the Magnificent Seven, let's take a look at Nvidia, for instance. Nvidia had a really nice pullback. Where did it pull back to? Into these areas where we had that sort of extensive bull run, and the market rebounded. We had a nice little move higher pre-market, suggesting that we're going to open a little bit higher here as well on Nvidia. So very nice sort of rebounds happening at the moment across the board. If we take a look at If I can get Alphabet up, which is Google. Still a little bit lower, but still rebounding from that sort of 200 moving average. If you look at it from a weekly chart as well, just coming back into that little area of support. So those of you that trade equities, this is a good time to see some discounted prices within the market, essentially. If we go take a look at the DAX as well, DAX finding some support, moving higher, and this just tells me the type of market we're in. This is the Dow Jones moving higher, and even the FTSE. Really nice sort of weekly close, and you can see the continuation of that move now, which is something that I quite like the look of, this continuation to the upside here. So yeah, very much bullish sentiment within the markets right now, especially from an equity side. From an FX side, it's been quite difficult. There's been a lot of chop and change within the markets recently, but this is where I like to just zoom out. Look at the weekly charts, see how the weekly charts are performing. One thing we spoke about in the week ahead analysis video this week was the price action here, right? And I felt that the opportunity for in the week was for price to come and retest 102.50, right? And we had that. The market came into 102.50. What we've had since that, though, is a correction from that 102.50 level, and now the market's finding some support. So it'll be interesting to see if we kind of crack through these recent highs, because that could lead to a little bit of dollar bullishness in the short term and a move back to the 104s. And that's where I kind of like looking at the weekly chart here, because we can see that we found support last week. It just wasn't very aggressive support at the time, and now the data, the fundamentals, is backing up the idea that maybe the labour market's not as fragile as what we're expecting, and that could mean a move back up into the 104. So it'd be interesting to see how this closes out this week. Have we got any more US dollar data coming up? Let's have a little look. Going into tomorrow, we've just got some sort of consumer sentiment, really, and some building permits. So it's only kind of I wouldn't say it's anything that's too dramatic that's going to happen to the US dollar going into tomorrow's session. We've got more retail sales out of the UK tomorrow, which will be interesting. But yeah, look at that weekly chart. Nice little price action there. Love using the weekly charts when we talk about trading, because it just gives you an overall sort of sentiment, right, of what's going on. Good afternoon, Vincent. Hope you're doing well. But yeah, let me know what you guys have been trading, what you guys have been up to. I'd be interested to know, to see kind of how your trading's been this week. My trading's been a little bit sideways, to be honest. I've taken more losses than I've took winners this week, but I do have some open trades still, which is dollar CAD short, which I haven't closed yet, so I've not fulfilled those orders yet. But dollar CAD, I'm still technically short here right now. I'm short quite a few times. Short up in this sort of 138.90s. Also got short recently. Where is that short? It's coming back to around break even at the moment, but I was up a little bit today. But it's kind of, let me look at the price that I've got here. What's that one? 137.46 was my next short, which was around this kind of level in here, which is almost like that retest of the 200 moving average on the other side. So that's pretty much coming back to break even at the moment on this data point. You know, market's moving higher. Still like CAD strength. Still do like CAD strength. You know, commitment to trader reports still showing, although the contracts have declined a little bit in terms of the buying and the selling from commercials. I still like the idea of price moving down towards 136. I had a big correction last week. So was I expecting this week to really, you know, drive home this move? Probably not. Typically after we get an aggressive move, the week after can be quite shallow in range. So yeah, I do still like dollar CAD to the downside, so I'm still holding on to that one for now. My stop losses, my one stop loss is at break even. My second stop loss is at the same stop loss as the first trade, so 137.46. So I've locked in quite a bit of profit on the first trade, and I'm just seeing if this can continue. The only thing that's annoying with this one really is the swap charges. Swaps have been quite high on dollar CAD, and that's because we are selling the currency that has the higher interest rate at the moment. So which is the US dollar. So I'll see if dollar CAD continues to play out. I think if I get stopped at break even on the one trade and in profit on the other, I'll still kind of look for an opportunity going into that next week. Maybe have a little monitor of this 4-hour chart, see if we can kind of continue to print sort of lower highs, give us an opportunity basically to continue. I did like the idea of this kind of pattern that was formed in the market. That's quite a sort of bearish pattern, that triangle pattern. But yeah, we just haven't seen the follow through, which I feel has been a big case in the markets recently. Not seeing a lot of follow through there. So yeah, dollar CAD's the only really one I liked the most. I managed to get into another pound CAD position recently, and I'm literally hanging around at break even at the moment on pound CAD as well, which is a short in and around this 176 handle. So yeah, I got short at 175.92. So pretty much at break even. You can see 175.90 there. So I'll see if we can continue this, because I still like the idea of being pound short. Although pound has had a pretty strong week, I can see Ratish was I was long pound US dollar, took my profits before the US data. Yeah, I like that move. We've spoken a lot about pound this week, and it's a very interesting week in terms of pound, right? Now, from a weekly chart perspective, I did feel like we would get a bit of a bullish week, right? And the reason being, if I just remove this and we talk about pound a little bit, market's kind of resting on that 200 moving average. But if I just take this off and we just kind of think about how the market has been moving lately, right? You've got this demand zone down here. We have a supply zone up here towards that 1.3, and that was where we were actively short on pound, right? Now the market came down, and technically here, if we were to kind of just cut off this little section here, market's making higher highs and higher lows, right? And we tapped into the demand zone, okay, which was around 127, and we closed back within the previous week's range. That's the first sign for me that maybe the selling momentum's coming to an end, right? It's coming to an end just in the short term. Fundamentally, do I still like pound short? Yes, because the Bank of England are in that sort of rate cutting cycle now. We had inflation data out this week, and although it was headline CPI was positive, services inflation was down, and you know, that to me was a big one. We also had the unemployment claims, which came up significantly higher, but the unemployment rate came in significantly lower, which was interesting to see. So I don't know where they get the national statistics there. I don't know where they're getting that information from, but sometimes the labour market data in the UK can be a little bit funny. I think we went through a period of having like 6 months of just average data rather than like proper data because of COVID and stuff. But yeah, this kind of move here at the moment could obviously lead to a bit of a move higher there. But if the dollar's going to start rebounding, then I do feel like cable could push a little bit lower. Looking at the 4-hour chart here, price is still fairly bullish for me. Market double bottomed and rallied, but we've come into this kind of area of strong volume now. So if I just kind of come up into here and go like this, you can see that there are strong volumes in and around this kind of 128 30s up to 128 60s. We also have quite a strong area up towards the 129 handle as well. So maybe if we did see a push on in pound prices, then, you know, you could argue this 129 could be a good spot for price to kind of move towards in the near future. But this is going to be interesting here. Again, if you kind of look at it in terms of what's the market doing, well, it formed a bit of a base there. You know, is this going to be like a double top pattern? And if price kind of closes below 128, could that be a sign that we're going to push back towards the 127 handle, for instance? Because like I said, I think fundamentally the pound is a little bit weaker. It's just that the US dollar has been weak, right? And if the dollar index is going to rebound from 102.50 or potentially rebound from 102.50 and start kind of pushing towards the 104s, then I would expect cable to come down a little bit as well because of that sort of inverse correlation. Good day to you, CG, as well. Ratish got dollar CAD still open too. Yeah, I'm still open at the moment. So yeah, that's all I've been kind of focused on this week, is looking at that. One thing we did try and touch upon was a little bit of Kiwi reversal coming into play. Now, the RBNZ cut rates unexpectedly. I expected the RBNZ to hold rates at 5.5%, but they cut by 25 basis points and turned a little bit dovish. Now, that meeting again was more of a 50-50 meeting for me, and whether they would cut or not. Reason being is because they've got some pressures in inflation in terms of wages and stuff. So there wasn't a concrete sort of, although the data has been kind of slowing, but if you look at inflation data in New Zealand, it's still fairly high, but they still feel like they're going to meet their targets, even though they're cutting interest rates. So that was the reason why we saw this reversal here, right? That was the reason why, because we had the New Zealand RBNZ cut interest rates by 25 basis points. Now, if I bring in the currency strength meter, wherever I've put that, I don't think I've got it on here at the moment. Let me just bring it up. We can see here the New Zealand dollar has been gaining some strength in that reversal zone. So you can see I've put it in as a potential long reversal. But yeah, it hasn't followed through this week. The market hasn't really been kind of continued that reversal pattern. And I guess that's because, you know, the fundamental driver is the driver at the end of the day, and the RBNZ have cut interest rates. You know, we were talking about potential Swiss and yen reversals this week, like the idea of yen shorts, and we were talking kind of potential for like pound yen longs and stuff. So if we go take a look at some of this yen now, let's go have a little look at pound yen. This was one of the markets that we felt could kind of reverse this week. And, you know, it has done pretty well in terms of a move higher. And one kind of level, or one kind of sort of pattern we were talking about, was the fact that, again, across the board, really, we had a lot of these sort of pinching sort of patterns. If you have a look at pound yen, go have a look at euro yen, very similar in terms of that. One that we liked was Kiwi yen, although that didn't play out in terms of having a concrete close above the highs there. We had a little bit of that. That was the RBNZ announcement, essentially. Aussie yen very much did the same thing. So a lot of the yen pairs were doing these type of moves, and we've started to see that yen weakness a little bit. Now, again, is this going to be sustained, or is this just a short-term pullback? Now, if we look at the dollar yen pricing, very similar. This is, again, something we spoke about in terms of having one of those triangle patterns and the market kind of breaking out of that. And if we look at the weekly chart, you know, there's a good chance that we're going to continue to drive higher here. Now, I'm not saying this move's necessarily done, but if we think about why this move was sort of conceived in the first place, right? You had poor CPI data, which the Bank of Japan jumped on in terms of intervention. They then drove home the idea of hiking interest rates. They then hiked interest rates. Then we had the sort of full unwind of the sort of carry trade situation going on, and where a lot of institutions were sort of over leveraged in yen. And essentially, we're getting a bit of a rebound to that now. And if we kind of compare it to what happened in the VIX, like if I just turn compare and we just go to the VIX, I'm just going to change this to a daily chart. And I'm going to pin this. We'll pin it to the left scale, right? And essentially the rise in volatility, right, can be attributed to that sort of move, right? We saw this huge rise in volatility, and that helped sort of drive that factor, because the market moved out of equities, moved into safe havens like the Japanese yen, like the Swiss franc. But if the volatility is now starting to come in a lot lower, is it going to give a little bit of a pause to this yen, and is the market going to start moving higher? Now, another thing we looked at Sorry, Keanu, I missed your message there. Only good setup this week was $1.30 for buys. Yeah, I like the idea of buying equities this week. I think they were good opportunities within the market. But the only other thing we looked at, I'm just going to put it up here for a moment because I'm going to bring up, I have to log in, was the commitment of trader reports, right? Let me see if this loads. And the commitment of trader reports are showing a sell signal on the Japanese yen right now. Okay. Why? Because short contracts have reached levels that we haven't seen for a good while. Okay. Now, would I like these contracts to kind of flip over a little bit? I would. You know, if we kind of look back in history, when we get a nice little sort of flip between the shorts and longs, we can see a nice little sort of upward trend develop. Okay, on the yen futures, this would be so. As this falls, that's dollar yen long essentially. So what I'm looking for here is, are we seeing a similar situation now where we're going to see a little bit of a crossover here, which is going to influence that sort of movement essentially. And we did have quite a long sell signal that was built up for sort of over a year before price eventually did start to kind of move away. So this is why I'm looking at, is this a long-term move or is this just a short-term move? At the moment, I feel like it's still very short-term. There are still some catalysts at play that could influence that sort of scare factor within the market, or that fear. And that's what I'm kind of looking at. But is this going to be a short-term sell signal for us? Only because if I just, again, just kind of highlight to you the short contracts, we're now at levels where if you look at the peak of this move, right, you can see the short contracts down in here. And if you look at the peak of it, that's when we really started to see that move down. And short contracts at that point were around 171,000 on the short side, right? Now, what are we this week? Well, we're 179,000. So that's short contracts being quite high. There was another short signal back in the day here as well, but you can see that one didn't actually play out very well. The market actually just kind of ignored that for a good while before seeing the continuation there. So I'm kind of looking at recent history, and the short contracts are the recent extreme, and we're above that at the moment. So, you know, that to me is, again, a little bit of a sign to say, okay, well, are we going to see Japanese yen weaken in the short term? So you want to be looking for your stronger currencies, really, if you're going to try and take advantage of this. Now, picking a strong currency at the moment has been quite difficult. You know, Swiss has been fairly weak. Like I said, the only ones we could probably have looked at this week maybe was pound yen, because pound has been strong for whatever reason. You know, I think the fundamentals are still quite poor, so I don't understand necessarily why pound has been gaining strength. You know, I'm just going to be honest with you, I don't see the strength in the pound at the moment, so I don't know whether this is just a bit of false sort of pricing at the minute. But essentially, you know, you want to be looking maybe to sell yen against stronger currencies. You know, I still like the idea of being a buyer of Canadian dollar, and you can see CAD yen has moved higher as well. Keanu, look at $1.30. Yeah, we were talking about the equities at the start. I really like the equity market at the moment. If we look at the sort of trend that's been developed here, really nice move. You know, like I was saying at the start of the live stream, we did a video called Correction or Recession, and I very much felt that this move was more of a correction rather than a recession. And we can see that the market has started to kind of continue this kind of bullish trend that's been developed here at the moment. And yeah, you know, that drop in the volatility index has helped the equity market move higher. Also, the data, right? Dollar data has not been that bad this week, and that's what's also putting investors' minds at ease, essentially. Because if we were going into a recession, there would have been some very negative numbers coming out. Sorry, I've just let my tea go cold here. You know, I'm English. I've got to drink some tea while on a live stream. Just be very Typical English. So let's go take a look at some commodities, right? Let's go take a look at some commodities, because gold has had an okay week, right? We're not really seeing the momentum to the upside at the moment. I'd still feel like gold has not reached the top. I still feel like we could see gold breach these levels and move higher. We came very close to highs again. Market sold off. Look at the daily chart. Market sold off yesterday as we were trying to push into new highs. You know, the current high that I've got on these particular charts here is $2,484, and we got to 2,480. So we got very, very close to that level. Market sold off again. Do I feel like this is bearish? I don't. You know, look at the price action. Unless something drastically changes right now, where, you know, gold closes bearish like this today, then I would reconsider trying to get long right now. But look, this could be one of those patterns forming again. This is something we've spoken about all the time. Have we got a triangle pattern that's forming where you've got higher lows in the market, and if we break that high, it could be a good catalyst for prices to move higher. So gold at the moment would be very tricky to trade on lower time frames because you're at resistance, essentially. And like I said, when we take a look at things like the commitment of trader reports, right? And this is what I think is very valuable when it comes to looking at a market like gold, because you have sort of producers and people in the business buying and selling gold to make profits and things like that. So commitment of trader reports, very, very useful on commodities. If you don't believe me, just research a very well-known trader called Larry Williams, and he's been trading for however long, and he uses commitment of trader reports when it comes to gold. So yeah, that's something you should take into consideration. But you can see the contracts aren't at aggressive levels still. You know, we've talked about this in the past. Where would I want to see sort of short contracts at if I want to be short gold? Well, it would be up towards this area here, which we found in like 2022, back in that March area of 2022, where we had short contracts up at 448,000. We're nowhere near that at the moment. We're at 357,000. There was another signal in here a long time ago on the commercials, which we only had a little bit of downside from. And that was back in 2020. And that was obviously due to sort of COVID situation going on within the market. So really speaking, I want to see numbers that are very similar to what we saw in terms of extreme here. And we're not there. So that to me tells me that the market top in gold, I don't feel is here right now. And that's why I feel like we're going to see a continuation of that. Okay, so let me know your thoughts on gold. Do you think gold's going to continue higher? Do you think it's going to move? I think we've got at least another, I reckon, till the end of the year, right? I do want to try and do some analysis on how gold performs in an election. Let's actually do that now. Let's go and have a little look at now, because we are starting to approach these election months now. We're in August. You know, if I take a look at major currencies and we go to, where is it? So it's not on here right now. Let's go to, sorry, indexes, US dollar index. There we go. Take a look at the US dollar index. And what I'm going to do is just take off 20-year, and I'm going to put the election year on. And typically towards the end of September, there's usually a good bull run on an election year, right? So that's for the US dollar index. Okay, so the US dollar index typically has quite a bullish move, and this is what I've been trying to talk about for a while, right? Now, if I look at sort of the election year and the current year, that's what this is. So you've got the green line, which is the current price of the dollar index for the year so far. And this is the sort of the election year, right? Have we been following the election year path? Not really. You can see the correlation here is -6%. So we're not really following the similar path of the election year. What we are following is a 20-year cycle. We're following the all-year cycle, which is 37 years. So if we look at the past 20 years, how does the US dollar particularly perform in August? Well, it can rally through August all the way till November, and that's similar to that sort of election period there. But you can see that obviously there's been more sort of familiarity with the 20-year pattern than there has been with the election year. So if I just take the election year off, you can see we have, let's say, recently June was bullish for the US dollar. That happens in a 20-year cycle. July was bearish for the US dollar. That happens in that 20-year cycle as well. And typically there's a bottom that forms in August on the US dollar. So that's quite interesting to see, right? If we're expecting the rebound at the 102.50s, maybe we're going to start seeing a bit of a bullish turn in the US dollar heading into that election period now. Now I can select other markets here as well. So we'll just go to metals and we take a look at gold. Okay, this is the gold versus the 20-year average. Okay, and what happens now? We can do other things as well. So if I just take the 20 years off and just pop the election year on, how does gold typically perform in that election year, right? And we're coming into sort of the elections, which is November time. But essentially, it can have a good little bull run up until September, right? Now you can see again, what's the correlation between current year's price and the election year? 7%. It's not very good. It's not very good at all. However, look at the 20-year. There's an 83% correlation for the past 20 years and what's happening on gold now, right? So what does that tell me? It tells me I want to be focusing on what happens here on the 20-year correlation versus the election year. And you can see here, there is a potential bull run that forms from August 16th, which is tomorrow, all the way to September the 2nd. And if we look at that pattern here, it has an 80% win rate. So that means over the past 20 years, it's had 16 bullish outcomes, 4 bearish outcomes. Okay. The overall return of that is 32%. The average performance of a run is 1.5% move. Okay. And you might think 1.5%, that's rubbish. But that's just 1.5% move of that market. It's not necessarily 1.5% return on investment. So there's a good chance that we're going to see another little bull run here. Okay. And you can see, look how this has been mirroring a 20-year average, right? Look at June. That little correlation between June this year and 20 years. How good is that, right? You've got this little pullback, a range forms, pullback, a range forms. We break out in July and move higher. And look what happened to price in July. Price broke out and moved higher. So yeah, definitely love using tools like this in terms of seasonality, in terms of commitment of trader reports, because you can build that why, right? And this is what I've been including in the videos for a while. It's the WCS method. This is something I've just made up recently. And the only reason I've abbreviated it is because it just makes it easier to say. But ultimately, why do you want to get involved with gold long? Well, the commitment of trader reports, we're not at extremes. Okay. So not at extremes in terms of short contracts. So the commercials are not necessarily selling aggressively. They're not necessarily buying aggressively. So what does that mean? Well, we need to look at the non-coms, and I didn't look at them at the time, but the non-coms essentially are still buying gold, right? They're still buying. Now, non-coms are hedge funds and things like that. So you really want to follow the big boys, right? And then you've got, what else have you got? Look at the seasonality. We've got a 83% correlation between what's happened over the past 20 years and with current price. And there's potential for a bull run tomorrow. To say tomorrow, don't assume that tomorrow it's going to happen. It's just an average of what's happened over the past 20 years. But essentially, there could be a little bull run between August 16th and September the 2nd. So that's something I'm quite interested in at the moment, especially if we then match up the conditions, right? So the WCS method is Y, you get involved. C is the conditions. Do you have the right conditions that match that? And S is just adding a strategy to be able to take it on. Now, if we look at this, what's going on? Well, if we look at the daily chart, do we have the conditions for to go long? Not yet, but what if we completed one of those patterns? What if we got a higher low and then the market broke through the high there? Then technically, right, we're starting to have a potential bullish breakout. So that could lead to a little bit of a bull run till the start of September. And then at the start of September, we could see a little bit maybe of a correction, maybe another little run. And I think 2025 is probably going to be the bad year for gold. But we'll see what happens. We'll see what happens at that point. But yeah, Ratish, can't figure out gold lately. Well, hopefully that little analysis there helped you with your decisions. Or with some thought process, at least, when it comes to looking at commodities. I've let my tea go beyond room temperature now. It's getting a bit cold. You know, and just to kind of reiterate some of this, because you might be thinking, well, what is that? What is this seasonality stuff that I'm talking about? Let's go take a look at one that's worked really nicely recently. And that is euro pound. Okay. Now, the correlation on euro pound wasn't actually very strong. You know, if we take a look at sort of the correlation between the years and this year, there's only a 35% correlation. There's almost a zero correlation between what happens in the election year and what's happening this year. Maybe that's because of the headlines that we've had in terms of elections and stuff, right? We've had, you know, I even forgot that Trump nearly got assassinated, right? So you had the assassination attempt. We've had Biden drop out. So it's not a typical sort of re-election potential move at the moment. You're getting a re-election in terms of, or, you know, if you can class it as a re-election in terms of Donald Trump becoming the president again, potentially. But then you've got the unknown, which is Kamala Harris, right? So there's all this unknown, and we're in a year as well where inflation has been, you know, a hot topic, and interest rates have been a very hot topic. So it's been a bit of a wild year. However, there's usually a very good pattern on euro pound, right? And it starts on August the 2nd, right? And typically from August the 2nd to August the 23rd, we can see a potential bull run on euro pound. And typically this can last till October, right? Which is something that I quite like in terms of looking at that potential, right? Now, correlation is not that great. I would like this to be a lot higher than it is. But if we look at how current prices reacted on August 2nd, if I just kind of bring this back into a candlestick chart for you so you can kind of have a little look at this in terms of just actual price action within the market. Look what happened on August 2nd, right? Market broke out, rallied to the upside quite aggressively. So I'm looking to see if there's a continuation pattern coming in here at the moment. Now, at the moment, we're having a little bit of a downside day. Again, not really sure why pound is particularly strong at the moment. In my opinion, it shouldn't be. I think the value is not there in the pound at the minute. But it's kind of recovered this little move. The only thing I can think of is we are coming into a little bit of an area of demand, which the market obviously found recently. But again, I think that was 14th of August. That was the pound data yesterday, which drove the market higher. And then we've seen just kind of a slow recovery of that. But I don't see this pound strength within the market at the minute. Maybe I'm wrong. You know, if I am, the market might start to push lower. I was kind of looking at retail sentiment as well yesterday, and retail are 64% short euro pound at the minute, and I don't want to do what retail are doing. So, you know, maybe this is the potential turning point in the market here. You know, this little bit of support that's come in towards that 85.46. So I'll see if we get a rebound from here, see if the market can start pushing a little bit higher at that point, essentially. But euro is just getting a little bit battered at the moment, isn't it? If I look at euro Oz, euro Kiwi is coming down a bit. Euro Swiss still trading higher. Euro yen still going. Euro CAD has had a fairly decent move lower there as well. So let's go take a look at how the market's impacted in terms of euro dollar. Yeah, I mean, we still broke out and made new highs recently, so you know, I'm not too fussed by that. Pound is just kind of holding this little bit of an area now, isn't it? That 128 seems to be the new sort of sticking point in the market there. So yeah, I don't see the value in pound longs at the moment, but you know, it's in my sort of notes to look at the potential reversal there. So I'll see what happens. You know, maybe this next currency strength meter coming up next week will show us that pound has reversed across the board slightly. Did I do the 50 moving average one this week? I don't know whether I did. Let's have a quick look. Yeah, so pound was in the reversal zone on the 50 moving average as well, but on the short side, right? So it was saying sort of pound, Swiss pound, yen short, but that's just based off of a 50 moving average, one which is still in very early days of testing. Right now, I'm thinking 85.25 long euro pound. Let's have a little look at that then. 85.25. Where are we now? We're at 85.50. 85.25. 25. Okay, just kind of in that sort of zone there, right? That little sort of pullbacky zone, which I think is the zone we first pointed out on Tuesday. I can't remember if we did point that out. This kind of area in here. I'm not sure if we did point that out now. I feel like we did. But yeah, that makes a lot of sense. 85.25s in and around that little sort of bearish candle zone there. We did get a sort of first little initial retest of it there, but maybe price will sort of sweep it and then make its move back to the upside. Perhaps, you know, that could be something to look out for in the near future. Right then, guys, I'm gonna sign, seal, and deliver it there. I think. Ratish stop loss. It's a good point. It's a good point. Where would you want your stop loss to be? ATR is saying about 13 pips on the 4-hour time frame, 38 pips on a daily chart. So let's just, for argument's sake, put 85.25 in on a. And again, it depends how you treat this move. So 38 pips would give you, I'd probably just round it up to 40 pips. So maybe 84, 85 on an ATR. That gives you 2.35 R back to the swing highs. So that's not bad. That's not bad, really, considering. So perhaps something like that. I would personally wait for price to come into a level of support and then go to a lower time frame, see if you get any kind of changes in condition. You know, if we look at that's like an area of consolidation. If that holds and then the market comes back in, we could maybe look at a retest opportunity there. Stop loss can then go below the sort of either the zone here or below swing lows. And then you could look to short-term target 85, and then long-term target up towards the 86s on that particular move there. So we'll see how that performs. Let's just have a quick flick on to dollar CAD, see how that's going. P&L has moved back in favor, so I'm guessing you're getting a bit of a rejection from this zone at the moment. So dollar's starting to fall a little bit from here, but CAD also starting to just take a little bit of strength again coming into the market. So yeah, still like this dollar CAD short, to be honest. It's my only play for this week, really. I did take, like I said, another short on pound CAD, but I'm still seeing it break even on pound CAD, so nothing really going on. So I'm gonna leave it there, guys. I'm going to leave it. So thank you for everybody that joined the live stream today. If you learned something new, hit that thumbs up button. Really lets me know that you enjoy the content that I'm doing here on Blueberry Markets. Also, if you have any questions of anything that you've seen today, feel free to drop it in the comment section after, or you can come and find me on Twitter, John Talks FX on Twitter if you want to come and chat there. But yeah, thanks for watching, guys. I hope you have a great weekend, and I'll speak to you all next week. Cheers.